Eric Mother with Mother.com for the weekend of June 4th and June 5th, 2016. Let's take a look at markets here with about 1 hour to go before the close. And we can see pretty much a slightly down day or unchanged. Markets were lower at the beginning of the session on Friday. We see that gold is having a nice session up about 2.5, and we see a pullback in crude oil. So let's take a look at the charts. Before I do, just want to remind you that I will not be able to record a public market analysis this upcoming weekend. My next weekend market analysis video is going to be on the weekend of June 18th, just because I'm going to be traveling this upcoming weekend. Subscribers should expect to get a video from me at some point, sometime on Sunday next weekend. And let's take a look at the Nasdaq here, and we're taking a look at the weekly, and we can see that the lines we've been watching for the Nasdaq are still in play. And even though the market is over the last over the past week, not much action, and we can see the reason being that we are coming back. We are still showing resistance on this line here, which is simple line connecting RSI highs. And also we can see that the line coming off the break off the high there. So this break line, or that break level, which we've been watching over the last so many weeks and months, is still in play because the market is coming back to test that break line on the RSI. Should be something like that. So we've been saying for a long time, in fact since sometime in late 2015, that as long as the Nasdaq is unable to move above these two lines, we should still expect the market to be sideways at best. So we are coming here. If the market is to move higher and substantially higher, it does need to break out. Otherwise, if it cannot break out and we continue seeing resistance on this line, then the RSI would confirm sentiment resistance, and eventually prices are going to have to start coming back down. Let's take a look at the Nasdaq Daily. And on the Nasdaq Daily, we got a simple line here that we have to consider. So coming off this most recent high here, we had a pullback. So we can draw a line from here, which gives us the break. This most recent break here brought the market off those highs of April. So we can draw a line, which should give us some type of resistance right now if the market moves above it and below it with uniform action, which actually seems like what is happening here. This might be an area where the market is reversing. Whenever you see this type of action, tends to be an area where the market pulls back. You can test the same red line by going backwards, and every time we have uniform activity rejection on the line, the market makes a short-term high. As you can see here, resistance at the line for the highs there. Also here, resistance on the line with uniform activity for the highs there. So right now it looks like the market is signaling around here we might be expecting a pullback after we see this resistance around the red line. Also, if we take a look at the Dow Weekly, we get the two same lines where we are seeing RSI resistance. We got the top side coming in play, and this is a 2-year weekly. So we can see right now the market has still not been able to move above that line. So that's one layer of resistance on the RSI. And then again, coming off the highs here, this is where the RSI broke down, and it is that break that we can use in the current market, because that break has been reliable over the last, let's call it 10 months or so, maybe even 1 year. Every time the market has hit this level like it did in late 2015, we get a pullback, and coming back here we had a pullback after this resistance in that current level. So right now the market is coming back, and we are still seeing resistance on those two lines. So until the market can gather enough energy to move above those two lines, we have to assume, and it's an assumption, that the market is not that strong, and that at this rate, with resistance confirmed here, if it continues to be resistance, we can continue expecting a pullback, and we can start playing the market to the upside whenever we see a breakout above these two lines on the RSI. Now if you take a look at the Dow Transports, or actually we can take a look at the Dow itself. Take a look at the Dow, and anybody who's been trading the market recently is aware that the market has been trading almost in a sideways manner, not too much up or down, and I think it's because we are trading in a wedge. You can see that the RSI on the Dow is forming a wedge and has been forming this wedge for a couple of weeks. And also we can see that the price, you can actually even draw some type of a wedge here that the market has been developing over the last couple of days. So until we can either move above that wedge for a move higher or move below that wedge, potentially for a move lower, right now we seem to be stuck in a range. Let's take a look at the Dow Transports hourly. Just want to show you that the reason why the market came off the lows of Friday's session is because some of the instruments were finding support. So the Dow Transports, if you take a look at a 6 months hourly, and again on my hourly charts I use RSI setting of 26 just to be clear. And what we do is that we can use the hourly for the Dow Transports to figure out where this move off the lows began sometime in February. And of course, since that RSI movement, we know that the market has gone on to record higher prices. So we can use that information on the RSI. So again, the RSI movement here, that RSI movement coincides with this perfect entry on hindsight. So we use that, and every time we have uniform activity on this line, we know that there is going to be a bounce. You can see uniform activity, double bottom here, support for the lows there and a bounce. Recently we also came and touched this level here for a bounce with uniform activity, and again at the lows of Friday's session we bounced on the line and the market came off the lows. So the hourly continues to hold the market together until we break below this green line. One can see that on the hourly markets are pretty much stable. And again on this Dow hourly, on the Dow Transports chart, you can see a wedge on the price. So there's a wedge here, and there's also top side line there. So this wedge might be the explanation as to why the market has been sideways. So until we move either above or below, we're stuck in this range. At some point the market is going to have to resolve by moving above this wedge or breaking down below it. Right now, since we are in the wedge, we might have to wait to see which way the market decides to take. For now, we are pretty much stuck in a sideways market. Let's take a look at the S&P 500 daily, and we can see here, we take a look at the RSI just like we did for the Nasdaq. Right now the market is coming back to test this break. This break brought the market off the highs recently, highs of April. So there, and so the RSI is what this break point is being tested. Looks like right now one can argue that this is what looks like double top on the RSI on the daily. As long as that's the case, one can continue expecting a pullback in the market. There is also another line which connects recent RSI highs, and even that is showing resistance. So until the market can move above these lines on the daily, for now we can continue expecting that markets are pointing down, especially since the weekly charts are already showing resistance. If we take a look at the 30-minute chart for the S&P 500, we can see that at the lows of Friday's session, the market came to this line, which is the RSI lows line on the 30-minute chart, and found support. And now we can see that if the market was to move higher, it would have to contend with this topside resistance. So again, we see another visual example as to why we are sideways lately, and it's because of these wedges that we are discussing in this video. You can see here the RSI on the 30-minute for the SPX also showing a wedge, and until we resolve above or below, we are probably for now stuck in a sideways market. Now really one of the main things we can watch for here is for true momentum. For the S&P 500, we have to assume that until we can break out above 2,107.39, which is the current all-time monthly closing high. Until we can move above that, we can't necessarily assume the market is strong. A breakout is what the bulls want to see so that they can know that the market is back to its strong bullish momentum. So for now, we can watch this level. Anything above that would be very bullish. Failure to move above this level over time might lead to the market pulling back. Just like we had resistance here, we tried to close above that level on a monthly basis, failed, eventually rolled over. So here we need a breakout if the market is to truly move higher. Failure to break out can lead to lower prices. And for the Dow, the level to watch is the current all-time monthly closing high, and the level to watch there is 18,132.70. Again, the current all-time monthly closing high from 2015. Until such a time as we can break out, one has to assume that this market has a lot to prove. Otherwise, a breakout is exactly what the bulls want to see. And for now, the bears can at least hang their hats on the fact that the market has been unable to break out on the monthly chart. Most recent breakout attempt was here during the month of April, and as we can see, we failed to hold that level and we've pulled back since. So a breakout is needed if the markets are truly to get into another strong uptick. Otherwise, failure to break out eventually over time does lead to lower prices. Eric Muathe, Muathe.com. A rather confusing phase in the market. We shall see how things go once the market resolves the wedge type formation, which can be observed on many charts. For example, on this 30-minute chart for the Dow or for the S&P 500. So pretty much a sideways market, and we have to wait for that to resolve. And a breakout is what is needed if the bulls are to truly take charge of this market. And again, a reminder, I will not have a video this upcoming weekend. My next public market analysis video is going to be on the weekend of June 18th. Good luck, peace, and blessings. EACS.